It's the latest sign the GTA's housing market is cooling fast. New numbers out show condo sales across the GTA have hit historic lows.
In the first 10 months of 2025, only 714 new condos were sold in Toronto. That's down 86% compared to 2023. July hit rock bottom, just 54 units sold in the entire month. According to Bloomberg, more than 8,200 condo units are sitting unsold on the market right now, with prices already down 20% from peak. And here's the kicker, another 10,000 units are already under construction, too far along to stop. The average Toronto condo owner lost $37,000 in value in 2025 alone. And analysts are warning this isn't over yet. They're projecting another $40,000 drop in 2026. This is Toronto's worst condo market in over 3 decades. Let's break down what just happened and why everyone's talking about it. I'm looking at data from Urbanation, and the numbers are brutal. New condo sales in the Greater Toronto and Hamilton area hit 319 units in Q3 2025. That's the lowest quarterly total since Q3 1990 to 35 years ago. Sales dropped 54% from a year ago and fell 92% below the 10-year average. Let me say that again, 92% below average. Justin Sherwood from the Building Industry and Land Development Association put it bluntly. We peaked in sales around 2021, 2022. In 2023, we halved. 2024 halved that. And in 2025, we're nowhere. The waterfront specifically? It's getting hammered. According to recent MLS data, the average waterfront community's condo is now selling for $721,967 and sitting on the market for 40 days. But here's what nobody saw coming. This collapse is happening right in the middle of a housing crisis. According to CMHC, only 2,540 new condo units broke ground in Toronto through September 2025. That's the lowest number since at least 1998. And if you want to stay updated on the housing market, hit that subscribe button. We upload daily breaking down the latest data and trends, so you don't miss what happens next. Let me walk you through the carnage. In Q3 2025 alone, 10 condo projects with 2,499 units were canceled. That brought the year-to-date total to 18 projects and 4,040 units scrapped. Since the start of 2024, we've seen 32 projects and nearly 7,000 units axed. And it gets worse. Urbanation is currently tracking 20 more projects totaling 4,187 units that are either on hold or in receivership, with a high likelihood of cancellation coming soon. One of the biggest examples? Birchley Park in East Toronto. This was supposed to be a vibrant community with condos, townhouses, and retail spaces. It got halted in early 2025. Developers had to return all the deposits and basically said, we need to reassess because the market has completely changed. Then there's the one, that luxury 85-story tower at Bloor in Yonge. The developer, Mizrahi Developments, defaulted on $1.23 billion in loans after total project debt hit $1.7 billion. Construction stalled at about 40 stories. On Toronto's waterfront, developers are getting desperate. Aqualuna Phase 2 is offering mortgage-free purchases for 30 months. Think about that. They're so desperate to move units, they'll cover your mortgage for 2.5 years. According to real estate analyst Carolina Armstrong, no one wants to catch a falling knife. And she's right. Why would you buy today when prices keep dropping? Here's the brutal reality investors are facing. A 2023 report by CIBC and Urbanation found that condo investors who closed on newly completed units experienced negative cash flow, averaging $597 per month. That's bleeding money every single month. Let me hit you with the hard numbers, because this is where you really see the scope of this collapse. Average condo prices across the GTA dropped from a peak of $790,398 in Q1 2022 to $680,146 in Q1 2025. That's a 14% decline, with analysts predicting another 15 to 20% drop from peak levels. In Q4 2025 specifically, The average condo selling price was $652,945, down 5.1% year over year. In Toronto proper, it was $690,607, down from $715,920 the previous year. Price per square foot tells an even grimmer story. New unsold condos averaged $1,524 per square foot in Q4 2024, down 10% from the peak of $1,689 in Q3 2022. By Q3 2025, completed developer-owned units were going for $1,199 per square foot. But here's the disconnect. Resale condos in recently completed buildings averaged just $867 per square foot. Developers are stuck asking 38% more than what the resale market says these units are actually worth. Inventory levels are completely out of control. Toronto condos are sitting at 7.85 months of inventory, the highest level in 5 years. At current sales pace, it would take over 50 months to absorb this inventory. A balanced market is considered 14 to 16 months. We're more than triple that. Active listings jumped 39.3% year over year in Q2 2025. Sales fell 20.9% in the same period. That's a deadly combination. Way more supply, way less demand. Developers are trapped. They can't lower prices enough to compete with resale because construction costs have skyrocketed 20% year over year. And here's the problem. Developers typically need to sell 70% of units before construction to secure financing. Right now, CMHC reported that just 45% of Toronto's pre-construction units had buyers in Q1 2025. That's way below the 70% threshold lenders require. Michael Niezgoda from Urbanation explains that previous cancellation waves were about individual developer failures. What we're seeing today is more of a wider market trend where there is basically the absence of buyers in the market, rising costs. The Bank of Canada cut rates to 2.75% in March 2025, but it hasn't helped. Borrowing costs remain too high for most buyers, especially when combined with falling prices. Investors, who used to make up over 70% of pre-construction buyers, have completely backed off. They've done the math. When you're losing $597 a month on rental income and watching your unit value drop, why would you buy? Here's the irony that should terrify everyone. This construction collapse is setting up an even worse housing crisis down the road. Remember, condo projects take 3 to 5 years from groundbreaking to completion. Buildings that should be delivering homes in 2027 and 2028 needed to start construction in 2024 and 2025. They didn't. Pre-construction sales are down 89% for condos across the Greater Toronto Area. This guarantees an even deeper downturn in 2026 and beyond. Assignment sales, where buyers flip pre-construction contracts before closing, have collapsed. Units are selling 10 to 30% below original purchase prices. Some buyers are walking away entirely, losing their deposits because they can't afford to close or can't get financing for property now worth less than they agree to pay. As of right now, early 2026, the market looks completely different than it did 3 years ago. TD Economics predicts prices will drop another 15 to 20% from 2023 peaks, with only modest recovery starting in 2026. Other forecasts project another $40,000 plus decline in average GTA condo values. The waterfront condo market that was supposed to be a sure thing, that was marketed to investors as can't-miss wealth building, it's broken. The buying frenzy that saw prices hit $1,600 per square foot for tiny units, that's over. And this single story exposes just how fragile the market really is. For homeowners watching their equity disappear, for investors stuck holding properties they can't afford to close on, for renters hoping this crash would make housing affordable. Everyone's on edge right now. Because if this is the warning sign, bigger trouble could be next.